What's going on, everybody? Travis Witherspoon, Trade with Travis on YouTube. Carter Cow Trading on Carter Cow Trading on Facebook. Hope everybody's doing very well. And get ready to hop on to Instagram. Probably might end up doing that a little bit late. Got some trades that I need to look at, but let's go ahead and get started with the overall trading opportunities for today. So I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision about what you want to be able to do for Forex trading. Now, understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, we got a lot of stuff to be able to talk about, a lot of stuff to be able to go over. Obviously, if you end up taking a look at my video yesterday that we end up having right around 3 o'clock, once all the news ended up coming out with the economic stimulus checks being put on hold, when it came down to an overall move that affected the overall market a lot. So obviously this is your place to be able to go to and talk about some of the things that are actually happening and be able to kind of bounce some ideas and be able to go from there. And obviously that's the reason why I'm here. So excited to be able to talk to each and every one of y'all. If you haven't been here before, if you haven't seen that before, please make sure that you end up liking, sharing, subscribing, and send this video to somebody that you think that will probably end up being interested in being able to learn how to Forex trade. We do this each and every morning at 7 a.m. to 7:30 a.m. And then after that, we obviously go through and do some training and trading and everything else like that a little bit later on throughout the day. So with that being said, I'm going to end up starting the day off like always. We're going to end up looking at the economic calendar, take a look at the big three, and after that, take a look and see what's happening for its overall trading opportunity. So yesterday, right around 4 o'clock, we end up getting some news, or right around 3 o'clock, we end up getting some news about President Trump and Nancy Pelosi basically going through an impasse and saying that that there wasn't going to be a stimulus package that was going to end up being done. The day before, we end up seeing that the Australian dollar end up having the same interest rate, but the market end up moving negatively. From there, all of the indices for the U.S. dollar end up going to the upside, and then after that, all of the indexes and everything else went to the downside. Now, what does this really mean? I think that was that move was kind of counteractive to what ended up happening for the overall decision and the overall move. Remember, we've been looking for the dollar to be strong, and we've been saying that October is probably going to end up being a month where the dollar is going to be strong anyway, all the way through. So in doing that, you have to be able to find positions that can end up placing you into the best position once we end up having a counter trend line break to the upside. Well, we got a counter trend line break to the upside, but we got it off of, to be honest, shaky news. So I'm kind of skeptical when it comes down to what's going to end up happening today, but obviously we look at the charts, and the charts basically tell us one thing, and then after that we look at what's happening when it comes down to fundamentals, and that tells us another thing. So with that being said, let's talk about what's going to end up happening today, and then after that, let's react about today and see how we can project that into the next few days. President Lagarde is going to end up speaking from the European Central Bank. He's going to end up talking, she's going to end up talking about what's going on for their stimulus package, what they're going to end up doing with their digital currency, what they're going to end up doing with everything that they have going on. After that, we're going to end up having FOMC meeting minutes. That's going to be very important to be able to pay attention to and kind of see how that's going to end up affecting the equities market as well. So I would keep my eye on that. Remember, stuff like the NASDAQ, stuff like the S&P, the US dollar ended up going up, everything ended up going down. Bitcoin ended up going down. Right. So we have to be able to pay attention to what's going to end up being said by that. Remember, this is typically a part of the first week of the month. So this got pushed back to the second week of the month because of, obviously, with us starting a new month, basically in a midweek. So that's where we are when it comes down to this. So that's what we have. Look at the currency strength chart as we speak today. The New Zealand Australian dollar is up right now. The Japanese yen is down. The US dollar has went back into the pack, but it's the second lowest at this particular point. And the Eurozone is basically up right now at this point. So we're looking at the Australian dollar basically have a little bit of a bounce back day. But we're looking at being able to get a high price on the Australian dollar so we can be able to sell it down. So I want you to be able to understand that. And that kind of brings us to one of our first trades that we're going to end up, that we have taken and being able to keep our eyes out on it. So we're going to start with the big three first, and then after that we'll hop into being able to look at the individual charts. The first one that I want to pay attention to is we'll pay attention to the the Australian dollar, United States dollar first, and then the U.S. Canadian dollar. I ended up taking a trade on that one. I talk about why I took the trade, and we'll see if it kind of plays out. We'll see how everything goes. So overall, market has went bearish. Market was bearish, broke out of this counter trend line break, had the transition. Then after that is on a second push. We are on the first day of the market being in the buy zone. Okay, so that means that we're looking at being able to potentially buy up to this overall position at 12,279 and going from there. Now, understand that by getting into it early, you can be able to ride this all the way out and allow this market to be able to move up to its overall D extension safely if you end up having a strong stop loss. And then after that, you just ride through the overall waves as long as the US dollar ends up having a strong catalyst to make the market move. Well, we have a couple things that's going for us. We have a counter trend line break to the upside. We have a full bullish candlestick move from here. Typically, the next day is a little bit more of a retest day, so we can be able to find 2-hour lows to be able to get in. Then we can be able to have a price to be able to go from there. And then after that, we can be able to ride it up. So the US dollar is expected to be bullish. Now, we take a look at what's happening with oil. We can see that oil is basically going from an ascending triangle, broke down, retest, and then broke again. And currently right now, we end up having the market basically move up to a level to where it could not break 40.50 and it's starting to reject slightly when it comes off this overall move. The only thing that I don't like about this is this market is at 42%. So it's going to be somewhat mixed when it comes down to its news. If we have negative news, or if we have a bad oil price day, then that means that the Canadian dollar should drop, which means that the U.S. Canadian dollar should be a fair trade to be able to get into and be able to trade it long term. And then be able to ride that out all the way down to $31.38 a barrel for being able to go in there. The way that it's looking right now is a little wonky. We can see that we have a support area right around $37 a barrel. We see that we have a resistance area right around 40.50. So I think we are looking at the start of consolidation if this is going to end up being the actual move and making this a R4 compared to being a R2. So I'm going to consider this to be a R4 now. Because it's an R4, now we're looking at consolidation between that overall move, because we have a resistance level that has not been broken at 40.50. We have a support level that has not been broken right around the $37 area. So that's the areas that we need to pay attention to now. Because we're at the portion of resistance right now, we should see that the market should bounce down to support, which means that hypothetically we should see that the U.S. Canadian dollar go to the upside, with the U.S. dollar gaining a little bit of strength. Currently right now, I just took a trade on it and I'm down 8 pips as we speak. That may end up giving you an opportunity to be able to take a look at it from there. All right, taking a look at what's happening with gold. We see what's happening. We can see that this market has went up. Broke a triangle, went to the downside. From there, did not complete the D extension and then rose up again. So that was your breakout. Here goes your retest. The market has broken down and broke a counter trend line break to the downside. We missed out on that overall move because of everything that happened yesterday. Currently, the market is at 59% as we speak, and we have a fractal high on this move, and the market is starting to move right here. So I will look at this in 2 different ways. One, if you want to be aggressive, you will have to say that you will look at this fractal low and you'll go to this fractal high right here. And you'll say if the market ends up breaking this area, in which it already has, you have a break to the downside, which means that looking at a pair like the US yen, you will actually be looking to be able to buy on that overall pair. I actually ended up having to cancel out my US yen trade earlier today because of that overall reason. I think that the market is going to go to 107 for that move, meaning that the US dollar, once again, is starting to look like it's starting to get a little bit stronger. Okay, let's go ahead and take a look at the NASDAQ real quick, 100, before we actually end up moving on. I am interested in being able to sell on this overall position. I tried to take a quick sale on this overall position a little bit earlier, but I ended up going against my 2-hour alert. So I want to see how it's reacting right now. And I obviously, if it's keeping on bouncing up to the upside, then obviously I made the correct decision by getting out of it a little bit earlier. Took a small loss, but I think that loss will be recovered based off of what I'm looking at right here. Now, remember, we end up having a strong downside move. We expect that this market is going to end up going to the downside and hitting a weekly 382 at 10,236. Yesterday, the market ended up pushing up, and then after that, pushing right back down. We were talking about trying to at least get to 1536 for the overall position. Then after that, looking at being able to sell. Well, the way that we end up doing the trade, it actually ended up we actually ended up getting canceled out before it actually ended up hitting the position. It actually hit our up position at 1536, and then after that hit our down position at the point of control. And so we lost on a double whammy when it came down to that overall position. And sometimes it happens like that. You just got to know that that's the reason why you trade. You trade for the wins. You sit up there and learn from the losses. And then after that, you got to allow yourself to be patient. And the way that you can be able to be patient is by lowering your stop loss and allowing the market to be able to move from there. Currently, we have a counter trend line break to the downside. We tested the counter trend line break. We had a retest yesterday. We're retesting the point of control right now at 11,348. I do like being able to sell on this overall move. We're not in the sell zone, but we do have a shift in the overall momentum. Because we have that shift in overall momentum, I'm looking to be able to get out at the weekly 382 at 10,236. And then if it keeps on moving down there to 990, that's about 300 points from here. Quite frankly, that'll sit up there and make me feel better for the little bit of losses if I'm able to catch this on this move. Now, we got to focus in on the 2 hour when it comes down to this overall break. If we look at the 2 hour, what we're going to end up seeing is this market may end up getting towards 11,414 or somewhere around this area before it starts to drop. I'm seeing that we have our 50-day moving average right around that area, right around 11,414. If we can be able to catch it right at that number, I think that'll be a very good place to be able to sell. Putting the stop above 11,538, which will allow you to be able to have a, we're looking at this, it'll allow us to be able to 120 point stop. With the reward going down to, if we're trading it based off of the 2 hour fibs, we can end up saying that will end up being a 406 point move. Okay, so that's the point that I'm interested in. That I have an alert set up for the 2 hour. As soon as it ends up crossing over this trend line, that I am interested in being able to sell. It is broken past the point of control, and quite frankly, remember, we're looking at this movement. I think that we'll probably see a little bit of upside movement. I took a trade last night to where I ended up buying up to the point of control and end up winning on that one. So we're there right now, but the only thing that I'm looking at now is what's going to happen from this point right here. This is basically a R6 no trade zone that we're in because the market is right here. If the market doesn't curl over and break the counter trend line break, there's no sell to be able to take until it actually does. But I do see that we have weak type of movement before the market opens at 930. So we need to keep that. We need to keep that in mind. As soon as the market ends up breaking and having a confirmed drop, you have a trade. But I want to see the market kind of push up a little bit more before that happens and goes from there. All right, let's take a look at the Australian dollar, United States dollar, and talk about why I got into the trade, what made me get into it a little bit earlier than what I wanted to, but we'll actually end up going down from there. All right, so we're gonna go based off of the daily. Daily is in the sell zone. We have a break, we have a retest, we have this move going to the downside. Yesterday we had that huge confirmation of the overall move to the downside. We missed out on the movement up here. Wish we could have got it, but that happens sometimes. It is what it is. And currently right now, we had a retest right around the 7150 area, and then after that, the market ended up dropping again. Since the market ended up dropping and breaking past resistance equals future support, we have a position to the downside to be able to take. Now, this is a strong position to be able to get into right now because of this reason. If we look at the 2 hour, on the 2 hour, the market is close to the sell zone, but we have an evening star right now. With this market being in an evening star, that is a bearish candlestick formation with a counter trend line break, with the market being close to the sell zone. That is a precision point entry trade all day long. So I am interested in being able to sell. I took the sale early. I tried to get up at 7160. The market did not push up to that area, unfortunately. And once again, beggars can't be choosers on this one. So quite frankly, I would enter in on this trade at market and be able to sell this overall position. I think that we'll probably end up getting further drops from here. The market did hit the 618, so it hit the sweet spot. Now we're going towards the downside. This is about as perfect of a candlestick formation that you'll end up seeing. Quite frankly, it is class worthy when it comes down to being able to see that. So we should see some overall downside movement on this overall pair, and we'll end up going from there. So once again, I placed my stop above the 7160 area. Once again, I was trying to get into the trade with the market being above 7170. Unfortunately, that did not happen. So the way that you can right now, what we're looking at for this overall position is this being able to sell it right here. And if it bounces up and retests it, then we end up having a break. But this is a active sale to be able to take and go from there. So let's see. Now, a couple things. This market could retest this overall high because it's not in the sell zone yet. But we do have a confirmation of a counter trend line break. And with us having a confirmation of a counter trend line break, and because we are in earlier than most people on this overall trade, I would say you have a position to be able to take right now. And once again, let's see. You always wish that you could be able to get in a little bit earlier, but sometimes it just doesn't happen like that. And you just have to be aware about that. I wanted to get it at 7160. If this market breaks this overall high, then obviously you should not be in the trade in the first place. But that's something to be able to think about. I'm going to cancel my my pending order, and we're going to end up going from there. So pending order at 7160 is gone. Now, if it does push up, the point of control is at 7160, which would basically be another area that it could break. But I'm looking for further downside movement to the downside to be able to see what will happen from there. Okay, so let's make sure we end up placing in our stop. Order. Stop out the 2 hour would be 7170. If we're trading this all the way down, the overall position where I would go to, we're looking at trading this for a long-term move, in which that's what I'm expecting. That's what I'm expecting to be able to see. Is that we're going to trade it all the way down to the point of control, which is basically 68.85. If you want to trade it further than that, you can be able to trade it down to the daily D extension at 67.96 for the overall position. So overall, I think that this movement has a little bit more of a fall. I think you can be able to go to a 66.50 area. As my boys hop inside of my room. Give me a second real quick. I just got bum rushed by my kids. Let's see. 66. I'm going to end up putting take profit one is going to be 68.85. We'll see how the market kind of reacts towards that overall position first, and then after that, we'll go from there. I'm sorry. Let's set it over again. That's 6,800. That's the first position. I know point of control is at 68.85, or basically 6,900. But the daily D extension is at 6,800. So once again, if we get that movement and it does break and it does go to our side and we have further decline for the Australian dollar, that's going to end up being a very solid trade for everyone. So there we go. All right, let's take a look at the U.S. Canadian dollar. U.S. Canadian dollar, what we just talked about with oil, if it remains to be true, we end up having some downside movement. We see consolidation. We should see the market start to push to the downside. Now, kind of like what happened with the dollar, this one's a little bit, kind of like what happened with the Australian dollar. Here's the movement. Broke the trend line to the upside. Had a D extension that we ended up hitting before on this overall push. And then after that, had another move to the downside where we just hit and broke the overall trend line yesterday as well. Now, we should be looking for further gains to the overall upside. The market is in the buy zone right now as well. So we have a counter trend line break with the market being in the buy zone. I think that we should see further movement towards the upside. If we do see that further movement towards the upside, we want to be able to catch it at a low price, obviously. And being able to look at what's happening right now, there's two areas that I can be able to look at and see how this market is going to end up retracing. First one, we have a counter trend line break right now as we speak, and the market ended up hitting the 382. Actually, the market ended up hitting the 50. So the market is healthy enough to be able to make a move right here. We end up having a break. We have a break above the A. Right now, we're looking at more of a bullish crown for its overall position. If this market continues to stay above 133, then that means that it's going to continue moving up, and we have a move all the way up to 135 that I think is probably going to end up happening. I have it at 135.80. My take profit is going to end up being at 135.70 if that remains to be true. However, if the market ends up breaking down below 133, then this market could fall. This market could fall just a little bit before it actually gives a better price to be able to get into. The reason why I took this trade was because that this market ended up, The reason why I took this trade was because this market ended up bouncing up. Let me show it on this one right here. Let's see. Okay, the reason why I ended up taking this trade was because this market ended up bouncing up. It broke past the 200-day EMA and the 50-day EMA, bounced off of this one, broke again, bounced off, and right now we can see that we have a golden cross right here in this area with the market bouncing toward the upside. Now, the stranglehold area that it has to get past is this area right here. If it gets past 133.10 to 133.20, then I think that it can have an easy run up to 133.80 before actually having any type of movement from that overall position. So obviously, we look at it, the market is not necessarily in the buy zone. That's the reason why you end up having a strong stop when it comes down to the overall position. But if this does run on this overall position, where I think it's going to end up going, at least for the first portion, that's 82 pips. 82 pips at a standard lot is $820. And so we're looking at this overall move. We have a counter trend line break. As long as this market maintains and holds, then it can be able to go up. Now, my stop loss is at 132.30. Now, and I'm going to look out for if this market ends up breaking down early throughout the day. If we don't get any type of extended movement to the upside, let's say if it breaks past 132.86, then that's going to be an area where I'm going to end up getting out at. The reason why I think I'm going to end up getting out at that area is because if we look at this overall move, we don't have a lot of strong price action once the market ends up breaking past this overall area, right? If it falls, it can fall all the way down to 132.20, or better yet, 131.80 before even making a move to the upside. So this is a decision area. We have a counter trend line break. The market is not necessarily in the buy zone, but the daily is in the buy zone. So I'm taking a trade based off of the counter trend line break and hoping for a push from everyone else when it comes down to that move. So quite frankly, if you did take that trade, or if you are going to take this trade, you can look at two different positions. One, you can wait and see and hope that this market is going to maintain this overall move toward the upside. And you can be able to place your stop at 132.40, kind of like what I have on mine. This is a short type of move. I'm doing it based off the crown. Or what you could be able to say is, I want to wait until the market ends up getting to the buy zone. But if it gets into the buy zone, it may end up running away from you. Because remember, if it does push up, it may end up pushing up a little bit faster than expected. So that is an active trade right there. Now, let's take a look at the trade that we ended up getting into yesterday, which is the U.S. Swiss franc, and that would be the last one today. We ended up getting into this one early, and I wish I would have gotten to the U.S. Canadian dollar early yesterday when I got the signal, because quite frankly, I wouldn't be going through this mess right now and trying to get in where the market is hesitating. We would have got in where the market was actually low. But same move. Market is bearish. Market broke through. Market was bearish. Market broke through. It's basically in the buy zone right now. We have a counter trend line break to the upside. Currently, the market is retesting this overall move, but as long as it stays above this overall line right here, this purple line that I'm getting ready to darken up a little bit, as long as the market stays above that line, then we have a strong trade to the upside that we could be looking at. Remember, that means that the market could push up maybe 7 to 11 days to the upside and maintain its overall move. If we end up having a break below this overall trend line and then it starts breaking towards our overall low, then that means that, quite frankly, we should not be in a trade in the first place. And that means that every trade is probably going to end up being a failed trade if that does happen. Obviously, we hope that that does not happen. but that is something that you have to be able to keep in mind of. Market is in the buy zone, but and we do have some counter trend line breaks, but even with this one, I do see an evening start is actually forming right here. So we have to be able to keep that in mind. Now, the 2 hour is at 66% on this one. Kind of like what's happened with oil and everything else like that. I mean, kind of like what's happening with every other pair. We have to be able to wait for this market to be able to retest before trying to get in on a second move. So what I would look for is this. We have the rejection and retest right here. The market started to push up, and then after that, we had indecision, and the market started to move down. What I would pay attention to is that how is the market going to end up going off of this breakout and retest somewhere around this area, and then after that push back up. If we can be able to get that, then we have a move. So I would wait a little bit more, and I would allow the market to be able to get into the buy zone on this pair before it end up making a decision and being able to trade it from there. If that does happen, then after that, you're good to go. Okay, now that is my time for today. You like what we end up doing, please make sure you like the Carter Cow Capital Trading business page. Please make sure you like Trade with Travis on YouTube. Obviously, we post videos each and every morning that basically ends up giving you trading ideas and overall activity and analysis so you can be able to learn. If you like what we end up doing, once again, just make sure that you end up hopping in with us. Like always, plan your trade.